Ladies and gentlemen, we come down to our final segment for the first day of India Digital Summit 2026. This panel discussion focuses on the next chapter of India Fintech revolution, how AI is rewriting payments. Moderating this panel discussion, allow me the pleasure of welcoming on stage Mr. Movin Jain, a founder, Skydo. With a round of applause, please join me in welcoming our moderator, Mr. Movin Jain, on stage. Thank you for being a part of this final discussion. You've got the daunting task of ensuring everyone's attention's on here. And lovely to have you be on board for the India Digital Summit 2026. Welcoming on stage our eminent speakers for this panel discussion. Let's welcome Mr. Rajagopal P, Head Digital Payment Solutions, Visa. Thank you, Mr. Rajagopal, for taking the time off and being a part of our summit and this panel discussion. Welcoming Mr. Sachin Castelino, Chief Strategy and Transformation Officer in Solutions Global. Mr. Sachin, for being a part of our summit and this discussion. Welcoming our next speaker, we have Mr. Sivaram Kowta, President Banking, Zeta, India. Thank you, Mr. Sivaram, for joining us and being a part of this discussion. Without any further ado, let's dive straight into this discussion. Please take your seats, dignitaries. And Mr. Jain, I leave it to you to lead the discussion and lead the way on stage.
I hope I'm audible. Okay. Hi, everyone. Good evening. And thank you for being here the entire day and still having the patience to listen to us towards the evening. We'll try to keep it short and sharp and hopefully useful and relevant. So the topic we have today is the next chapter of the fintech revolution, AI in payments. And so a few days back when I was added to this panel, I was thinking about what AI in payments could be beyond risk management, which is one of the first things that I came across as the applications of AI about a year back in what I do. But I think as we got discussing with the panel here, and as you will hopefully realize, I think there's a lot more that we were able to discover and unpack. And I think I'm looking forward to learning a lot from these three gentlemen today. So let's dive straight into it. I think we can start with a quick round of introductions. So maybe Siva, why don't you start and I'll be last.
All right. Thank you. Thanks, Movin. Hello, everyone. My name is Sivaram. I lead Zeta in India. And as Zeta, we are a core banking, payments and processing company. We primarily serve banks and large fintechs in India and globally. Bulk of our business is US centric, but we also have a few very large clients in India also.
I'm Sachin Castelino. I run strategy and transformation for In Solutions Global. We provide payment solutions and a lot of back-end solutions for banks and fintechs, and we have got a predominant presence in India and across Asia Pacific and the Middle East.
Hi, I'm Rajagopal. You can call me Raja. I lead digital solutions for Visa in the India and the neighboring South Asian markets, and this includes payment solutions like tokenization, one-click checkout, passkeys, and the latest and greatest agentic commerce solution as well.
Thank you. I'm Movin. I'm the founder of Skydo. It's a cross-border payments company. We are a payment aggregator in India and now also expanding globally. So, by the way, we also had one more panelist who could not make it, unfortunately. He just landed in Bangalore. His flight was awfully late. His name is Manoj. So, I think we can start with the topics that we have at hand. I think one of the first things that I became familiar with, as I mentioned, with AI in payments was fraud and risk management. And I think I'd love to hear from some of you what you've experienced in that domain and what's the cutting edge at this point in terms of how AI can help control fraud and improve risk management.
So from our perspective, I think one of the things that AI has done is the ability to process larger and larger volumes of data, right? So we are able to look at we are able to look at risks across a much larger data set. So earlier we used to look at things at very sort of in a siloed fashion, right? So onboarding risk look separately, transaction risk we look at separately, and then you got your entire settlement risk that we looked at separately. In certain cases, that would never even looked at. Right? So whatever transactions were done, we ensured that those were settled. And this I'm talking from a merchant standpoint. Similarly, the I think the first pieces and first areas where AI started to come into really well was around the cardholder and cardholder protection side. But now, since AI is able to sort of leverage so much amount of data, we are now able to look at like the merchant ecosystem and the cardholder ecosystem from an end-to-end standpoint and from a behavioral standpoint. But as we move along and we move to the next phase, I think it would be interesting to understand from an agent and an agent perspective as to what the views were.
So, when I would just like to add, whenever any new technology has come, there are two industries which adopt it the fastest and frankly much better than others. One is adult entertainment. The other is the fraud. Not the people trying to prevent fraud, the people trying to do fraud. They adopt this technology far faster and better than the people trying to prevent it. And, when SMS OTP started, I think parallelly was born SMS spoofing, right? And so on. You can trace the history back till before any technologies came. These two industries have historically, because the incentives are so much greater for them to adopt anything and maximize it. So my opening is that I'm actually scared for the future with AI coming, because in order to determine that Movin is Movin, we are using his mobile as a proxy, we are using his fingerprint as a proxy, we are using his face as a proxy. Something to say that you are you. AI capabilities, exactly everything you described, compute power that's now coming, is going to be able to replicate all of this. I mean, we all saw those Mission Impossible series where retina scan, voice, all of that. By the way, today I can do that on my phone with a Gemini, and it's going to replicate all of it, enough to fool the traditional. So the answer is not simple. It cannot be a solution. In fact, my own hypothesis is that first, we are going to see a reversal of KYC going back to manual method. Unless someone has physically verified, a human has physically verified you are you, I shall not trust you. Because we are already seeing an increase in frauds, in digital arrests happening on video. We all seen those phone calls that come and pretend. It started with email that someone pretending to be me has written to you and said, send money over. Then they got better. Somebody made a phone call sounding like me. Now they are making video calls looking like me. By the way, it's all coming from my number. At what point do you decide that this is not me? Unless you are there physically in front of me, and maybe robotic advances may break that also, but till now that's not there. So I, in fact, see first a reversal happening, and then the industry as a whole has to come together and regulate this and act together. Today, no one party. What you spoke about is intra for the supply chain, but unless all of us come together, and the bodies like the ones who are helping us conduct this, as well as maybe say NPCI, a bunch of bodies have to come together. In fact, the regulator at the top has to come together. Some moves from RBI are encouraging. They're trying to talk about exactly this, trying to build a central fraud database. Then all these technologies are useful. Otherwise, we don't stand a chance against these abusers, is my theory. Not a popular opinion, I'm sure. But we've been trying to work with banks. We keep trying to prevent it. They just find another way. It's like trying to press a balloon in one area, it just blows up on the other side. So that's where I stand.
I have one question for you, Siva. So, how easily or rapidly do you see Indian banks evolving to this change? And is there a sort of velocity of AI transformation on which you can comment in Indian banks versus, say, globally?
So we work with a couple and we are in generally good terms with most people. By and large, I would say from an experimentation and a piloting phase, they're putting in the required investments. Almost everybody is making the required investments. But how many are productionized? How many are commercialized? Nobody. And for good reason. See, the banker understands the product they're selling is not a savings account or credit or loan. The product they're selling is trust. So, and now DPDP has come. It's a completely different topic, but that only crystallizes more that the reason you go to a bank is to store something in a trusted fashion. Today it's your money. Tomorrow it could be your data. And that's exactly, I believe, what will happen also. Trust is the commodity. They, as custodians of their trust, are moving very slowly. They're experimenting a lot. Right now, a lot of implementations happening that's away from direct customer interaction. The operations we are seeing. So a lot of these mundane tasks that can be automated. The generation one application of AI, at least we are seeing a lot of that. And a lot of benefits come from there. A standard bank in India, even the smallest bank, has more than 25,000 employees. I think that number, a lot of scope to come down.
Thank you. I think it was a good learning for me on how there could be a reversal away from technology just because of the AI revolution. So a bit counterintuitive at first, but very interesting. Let's move to the next thing that we wanted to discuss. By the way, we'll leave some time for questions in the end. So if any of you is having any questions, then please save them and we'll hopefully be able to answer them. So the next thing we wanted to discuss is autonomous or agentic payments, on which I think the payment networks are doing a bunch of work. So maybe Raja, from your vantage point at Visa, and this is obviously a theme that you directly lead at Visa, what's happening and what could we expect in the next few years?
So thanks. Firstly, thanks for the opportunity. We know we are the closing act, so we'll try to keep it rich in information and hopefully some takeaways. So payments is the heart of commerce. So before we talk about what's happening in agentic payments, we should talk about what's happening in agentic commerce, which is giving us encouragement as networks to invest in agentic payment solutions, right? So some stats. There are some research that says that 50% of Gen Zs are now doing their shopping queries on AI platforms, right? That's one stat. Second stat is there is a 4,700% increase to merchant websites emanating from AI platforms over what it was last year, right? Third stat, India is the second largest user of the biggest AI platform in the world, ChatGPT, soon to be number one. When you put all of this together, what we are talking about is there is a lot of interest amongst users. While this group, the age profile, demographic profile might be different, where when we talk at a country level, global level, there is a lot of interest that consumers have in AI platforms in their daily life. They are now increasingly not looking AI platforms as just where they go for answers, they go for recommendations as well. And soon they are talking about considering AI platforms as a trusted source for their shopping recommendation. So the way we are seeing it evolve is from a search engine, what it was 10 years back, things you went to a search engine for. Now you're going to your AI platform, right? Like just think about what you use your AI platform now, which you used to do with your favorite search engine even 5 years back. So from a search engine to an answers engine, and from an answers engine, the next evolution is the action engine. So that's where we're talking about agentic commerce, which is having an autonomous agent, which is in your case, a very trusted AI platform with whom you spend nearly 2 to 2.5 hours a day. If you think about if you go through your phone's digital usage, now that it knows everything about you. The joke is that your AI platform knows more about you than your spouse does, right? Like your deepest secrets, your worries, or your likes, dislikes, etc. So now, if that AI agent has, in a trustable way, your payment credentials, it knows what you want, it knows your latent needs, it has a trusted way to use your payment credentials. The technology supports autonomous or semi-autonomous purchase decisions that can be made. And if we put guardrails around it to reduce the risks that Siva talked about and take it forward, agentic commerce is the next unlock in commerce. From face-to-face payments 75 years back, where both the buyer and the seller were in the same place, to e-commerce 35 years back, where the buyer was a human but the seller was a machine, a website, to agentic commerce, where it's a machine-to-machine interaction. It's the buyer's agent, the AI platform, going and making purchase on behalf of the buyer, with the buyer in the loop, a human in the loop, at the merchant website. So that's the next unlock. It will reduce cognitive burden that we usually go through as shoppers. And the important thing is that any solution for AI commerce has to be a right solution for AI payments. And payments, we believe, has to have three pillars: AI payments, trust, security, and control. I'll just quickly elaborate on that. The right trust fostering solution for AI payments should ensure that only good actors participate. Because the net new, Sachin and I were just speaking offline, the net new actor in AI commerce and by extension AI payments is the AI platform, right? Everybody else is the same. The user is still the human, the banks who are issuing cards, the acquiring banks, merchants, they are all the same. The net new entity entering the ecosystem is the AI platform. So we need to only allow trusted, verified, vetted, physically vetted, if you want, Siva, AI platforms, so that we know that. So on those lines, we have introduced, and this is not a pitch for the product. This is just to say that it's real out there. Visa Intelligent Commerce, you should go and read about it. So what it does is, we don't let anyone in, right? We first do our due diligence. Pretty much like what we did when we launched tokenization 15 years back, right? We checked if the entity entering it is, we have contractual rules in place, dispute management processes in place, etc. That's the commercial side of it. On the technical side of it, we engender trust by saying that typically merchants have always looked at bots as bad actors, right? Like bots, traditionally, if you ask any CISO of a merchant website, they think bots are out there to hack, hijack, etc. Now, a bot could be a good bot, right? If an AI platform comes and interacts with you, it could be on behalf of a human trying to make a purchase at a merchant website. So merchants need to know difference between a good bot and a bad bot. So that's also a way to increase trust. So signals that the AI agent carries in its interaction with the merchant should indicate trust. Security, right? Like pretty much when we started e-commerce, there were rogue merchant websites which used to steal cards from gullible customers. Like now we see it in certain digital errors, etc. So how do you keep payment credentials safe in this new world? So tokenization is a solution. India is no stranger to tokenization. 100% of e-commerce transactions on cards in India runs on tokenization. We believe we have to extend that to AI payments as well. So pretty much like how tokens are tied to a merchant website purpose-specific credentials, we will have to tie it to an agent so that a good agent has your payment credential, and if that credential is lost in the ether, a bad agent cannot misuse it because it is agent tied. Similarly, authentication, human in the loop is very important. At all points, it's a zero trust architecture, right? Like never trust, always verify. That's the concept, right? So therefore, how do we ensure that we know the agent is acting on behalf of the consumer, right? So the human needs to give her biometric authentication before the agent finally makes the purchase. So put in those checks in place so that the authentication security is there. Finally, control, right? So all of this comes together and will be of no use if the agent goes and does something that else different from what the consumer wanted it to do. So therefore, the human should be in the loop. There should be a way for the human to know before the agent finally makes the purchase. So think of it like, okay, you tell your personal shopping assistant, hey, go and do this for me. It does the difficult part of search, shortlist, discovery, fills the checkout page, and then finally just takes a final okay from you. That's the human in the loop, right? So the technology needs to support that, so that the grunt work of the upstream, the search, discovery, shortlist part is delegated to the agent, but you still are the person who puts her biometric to say, yes, go and make this purchase, buy this thing from this merchant for this dollars, etc., etc. So that's the framework we are talking.
Great. I think Siva, maybe from your vantage point, any comments on agentic payments and autonomous payments, and particularly is this angle also being actively explored by banks?
No, banks, I don't think so already. As I said, banks are by design not operating at leading edge or even leading edge, and that's right thing for them to do. But I do want to comment on there is a lot of discussion happening on how agentic AI will be applied by the organized players, the merchant, the bank, and so on. But I think the biggest rise of agentic AI will happen when user agents come to the fore. So we don't see so many application AI companies which are talking on behalf of the user. So you buy an agent from me or rent an agent or subscribe to an agent, and this agent can help you look better. This agent can help you do so many things. That conversation's not really taken off. But the moment that happens, I have a few, hypotheses of what might happen. For example, we will go away from trying to execute tasks to trying to execute outcomes. Sounds fancy, but if I, for example, want to just cook dinner for friends, normally I would have to apply myself, go and add all of these items, the Amazon cart or anywhere, or a grocery cart, buy them, then they get delivered and so on. Versus if I had a user agent acting on my behalf, I just need to say I want to cook for 4 people and I want to cook some Thai pasta or whatever. It knows the recipe. It can add the appropriate items, put it all together. By the way, if I've pre-authorized a wallet for the agent to access, it can complete the transaction. And if there are advances in robotics, sounds futuristic, but if there are advances in robotics, it's going to collect it and cook it also. But sans that, we are already at a stage where the first half can happen. So we can see that. The second, and I learn a lot from history and how things are, is I'm drawing my hypothesis from there. I believe payments are on a course to go invisible. The idea is not for users to do more with payments, it's to do less of it. In the 1930s, the first time the electric fans came, the motor was sold separately and the blades were sold separately. That's how it was. People bought the two together, your electrician recommended, etc. Then you fit the two together in your house and so on. This was the case with computers. We used to buy, the assembled PC was a big thing, at least while we were growing up. And then it was not a big thing. Branded came. Then Intel did its campaign, and again it came, and it keeps yo-yoing. But by and large, you see time after time, industry after industry, they go towards simplification. The complexity of payments, because it involves so many players, has somehow not got that. There's a merchant, there's bank, there's network, there's settlement, so many things happening. But over time, the effort has always been to try and make them invisible, whether conscious or not. That's the trend. With Agentic, I think that's what's going to get a huge acceleration. For example, about 5-6% of card declines are due to balance not available. But most of the time, I'm attempting to use a card. I assume I'm worth the amount I'm making, which means there is a technical problem. Technical in the sense that that particular account may not have the balance, or for whatever reason, I'm maxed out on that limit there, etc. There is no need for that transaction to be declined because I'm worth that. I'm good for it. It's just the way the systems are configured. With a user agent acting on my behalf, it can split the payment, can say 2,000 rupees you wish to spend, 1,000 from your debit card, 1,000 from your credit card, and complete the transaction. Possible. It can tap into a PNPL. In fact, if there is a bank agent available, it can negotiate in real time with the bank and say, give me a line, I'm going to use that, then complete the payment. So the options of how payments, agentic applications of two payments are enormous. We need to see trusted, robust user agents also emerge, which is not something that's happened. We are seeing in the US at least a lot of work happening there. There are a lot of startups trying to push those out. They have to break through. And then I think this is something that will happen. And payments will truly get invisible. You won't think about the payment. You will think about only the outcome you wish to achieve. And payment will happen on this. And a corollary to that, we will see human to human payments go down and machine to machine payments go up. Why should I have to pay for coffee? I should take my coffee and come out and payment should happen. If I'm trying to charge my vehicle, my car should negotiate with the charging point and complete the payment. Today, humans are required to complete payment, but the infrastructure is already there, machines to negotiate and complete the payment. So that's the second piece I think that will come. Maybe in a 5 to 7 year period, we'll.
I think this makes me think that AI in payments is going to bring a cultural change as well, and not just a technological change.
That's exactly.
So the next thing that we wanted to discuss is how can AI make automation between organizations possible that was not earlier possible. Maybe Sachin, you can start.
Sure. So, from our perspective, being in an ecosystem where like a single payment and depending on how many people know this, but in a single payment, like we have got 5-party models, and it's just not 5 parties. Actually, the 5 parties are ones that just connect with each other. At the back end of it, there are so many third-party service providers that are there. It can go up to like 10 organizations that are functioning together to ensure that a payment happens, right? So this includes a Visa and a Mastercards and all of us here. There's a lot of work that goes on in the background for us to keep this up and running, right? So today, for any transaction to happen, it happens in a blink of an eye, okay, and it happens across all of these organizations and back, and there's strict standards across all of this. And as we have been discussing FRM, we have been discussing fraud and risk, and we've been discussing these new ways of how we're going to make payments. What's going to happen is that these things are going to rapidly evolve. As Shiva, you had started with the conversation saying that it's always the fraudulent actors that start first, right? So with that in mind, what ends up happening is that all the organizations have to move quickly to plug these gaps. Now, if we go the traditional route of plugging these gaps of saying, oh, this is my hypothesis here, is that, see, because our thought can be that, okay, we need to plug these gaps fast. Okay. And of course, we have these fraudulent actors who really don't have all these organizational boundaries and saying that, okay, I've got to comply to some regulation, etc. But we all do. So one of the things that I see that potentially can I think all our organizations will be pushed towards that, so that we can keep pace with what is happening, and especially protect the consumers, protect the merchants from all of these elements, would be is that inter-organizational agentic conversations, right? So for example, if tomorrow Visa comes up with a mandate saying that, okay guys, we have found like a new way someone is hacking somebody, and so we are going to release an update. That update should then probably talk to each of our organizations, and there should be an agent on the other side that says that we have received, we have understood what this is, and maybe a quick human in the loop, but then that just does the development code and like executes this, right? Which is a far cry from what we do today, which is where we get documents from each other, then we acknowledge, then we have like a full projects team that runs, and by that time, God knows how many $1 billion each and every one of us lose. Right? So which is where I feel that so whatever we speak from a front end standpoint, I think this is what is going to make it work. Okay, so because all of us in the ecosystem need to work together to ensure that the consumer and merchant are safe, and like commerce is trustworthy and continues to remain trustworthy within the country. And so I the way I see it is that and I would love to wait for this day where there's a Visa agent and there's an ISD agent and a Zeta agent, and then all of us are just at the back just going like, okay, we just need these guys to do this, and the agents are just automatically able to function and deliver those workflows that are required.
I think this is very interesting. One of the things that we've seen at Skydo is we've been able to automate our responses to RFIs from our nodal banks because we get a few hundred every day now, and usually the compliance team would look at each of them, then answer each of them, and each of these RFIs is on email and it's in English, and then you have to convince a human being on the other side that this merchant is genuine. So now we do most of that through AI. In some cases, of course, when the merchant is actually suspicious, we need a human in the loop. But I think it is a significant release of bandwidth, and now the team can actually do smarter things. Moving on to the next topic, I think we should probably spend the next few minutes on discussing the application layer in AI from a B2B perspective. So there are quite a few startups who are building voice and vernacular solutions. How could that transform payments in the next few years? Maybe, Siva, you can start.
So obviously, I think the common sense tells us that it's going to be groundbreaking. India especially, English literacy is equal to financial literacy is equal to prosperity. It is just the way our country has evolved. That's why we have this huge digital divide and so on. Tomorrow, just imagine if, and by the way, intelligence, raw intelligence or ability to do business or so on is not limited to English as a language. We've just maybe colonial legacy and so many factors, we've evolved that way. With voice and the ability in AI to, to understand, interpret voice, unstructured voice data, I think that is really breakthrough. Because imagine there's a small, a shopkeeper, and we have these sound boxes. Yeah, I was thinking about it this way: that sound boxes in all our the Paytms and Phone Pays, everyone's done a great job of making sure everybody has one. But today it's just a passive notification device. But that itself has changed the game for them. It's in some cases 50% improved their productivity because they don't need to check the payment. They just, while they're taking the next payment, they get to hear that the previous payment went through and so on. Now imagine if that became an interactive device, if they were able to talk to it, if they were able to ask it, kal kitna dhanda hua, aaj tak kitna hua, abhi tak kitna hua, so on. Further, imagine if this AI that is on ground is also able to figure out that this customer is always paying you late. And therefore, it advises you that this customer don't extend credit, take partial prepayment first, and so on. So it sort of becomes your financial advisor. I'm sure doesn't require special insight, and all these companies might already be working on converting their sound boxes into something bigger. But at this point, I also want to sound my note of caution that just as voice has the capability to be the great equalizer and allow the people who didn't participate in the revolution to come in, it also presents the risk. How does the box that is receiving the sound know that it is actually the person who is making that sound? How do you know it's not my voice recorded or from some other source and actually me standing in front of the device? Again, we've seen all these sci-fi movies and Hollywood has given enough of that. Why can't you replicate? In fact, you don't even need all that, right? You can go to the Google Video app and literally make up whatever you want and it's going to say that. How do you figure out it's not that? So the risk of fraud has to be solved. But once that, and I'm sure it will be broken because there are enough work happening there. Once that's done, the role of voice in bringing financial inclusion in this country will probably be far more. Back almost 15, 20 years ago, and I was entering the workforce, we had seen the government of India used to spend so much money trying to educate the rural population about hygiene. It's an unrelated example, but I'm saying from where it happens. It had some effect. Then the Saas Bahu serials came, whenever they came in the last decade. And there, without making a point about it, they demonstrated that they are, washing their hands and so on. That had a far bigger impact on bringing in hygiene, and as could be seen from data of sales of soaps in rural India and so on. Just like that, there have been so many efforts to bring financial inclusion, so many, micro loan, this, that, so many things have been done. But I think voice in an unintended way is going to bring about far more inclusion than all the previous efforts.
Makes sense. I think we can quickly move to the last thing that we wanted to discuss, and after that we can open for questions. So in this era where a lot of startups are building applications for companies, for banks, for fintechs to deploy, and give consumers a better experience or automate their internal operations. What's your take on our organizations from small fintechs to large banks? What's the trend of build versus buy? How are they thinking of using this technology? Are they open to utilizing vendors versus do they mostly want to do it in-house? And I'm sure it's a spectrum from a small organization to a large one, and a young organization to a mature one. So how does that change? Maybe Sachin, you can start.
So this and these are just principles that that I end up following within the organization and within the work that I do. This about 10 years ago, I'd visited a couple of banks in South Africa, and we were sitting down with some of those directors, and one of the directors made it a point, and it was a forum of other directors as well. They made it a point to say and introduce that we have hired people from Google just for user experience. Okay, and they used to build all the user experience internally. And we'd ask them that question as to why did you do that? Right? There are not a lot of organizations, there are not a lot of banks. If we just talk from a fintech perspective, of course, everything is built in-house from that user experience perspective. But from a bank perspective, why did they do that? And a simple answer there was, and which is something that I carry with me, is that I'm doing what's important to me, okay, and what's important to my customer. And I think that's a very simple rallying call around which we can all sort of like pass through the clutter of saying that okay, build or buy or expertise, etc. The question there that I think through, and even as we go through our own AI journey, is saying what's important to my customer. And that in itself, and that I would say that will be whatever is my unique selling point, and I would want to keep that as an organization US. Okay. Other than that, everything else I can get experts from outside to help me work that through. Now, so then the next point comes in is that if we want to buy, then how do we go about it as well, right? So there are a few other pieces that come through, especially from an AI standpoint. One is regarding security concerns, right? So our ability to monitor our service providers to ensure that they are using everything securely, etc. That becomes one more critical component for us to have once we have understood that okay, these are the things that we need to build. The rest, everything else is something that we can move forward with and buy. Then security becomes one. The second thing that is a good guiding principle is around data privacy, right? So now soon we will start to become like the data processor, data fiduciary is going to become very common language amongst all of us. And I think one of the challenges that we're going to have, especially with agentic commerce, is going to be that who owns that customer data? Is that interaction with the agent the customer's data or not as well, right? So because there is a right to be forgotten and all of those aspects that start to come through. So the ability to architect for that, so that your consumers, because at the end of the day, as we have said here as well, that trust is the game here. Okay. So no matter how great the service, no matter how great everything else, that tomorrow you come to know, okay, we've been selling this data for something else or the other, your consumer trust can erode like overnight. Okay, and consumer and merchant trust can erode overnight. Your customer trust can erode overnight. And I think that with the trust element there and understanding what's important to one can start making decisions on build versus buy. I think I would stick to the principles rather than say that okay, go build this and go buy that. I think those principles I would use that as guiding light for me while I make those.
Siva, any quick thoughts on what banks are thinking on this domain?
Yes. Actually, we work largely with large enterprises. So they tend to think about this a bit. So the entire AI stack is a 5-layered stack. It starts with the core infrastructure layer, the GPUs or TPUs and whatnot. Should you buy those? Should you rent those? That's the first question a bank asks. And legitimately so. They have to start by asking from that. Unless you have serious capital that somebody else is giving, and banks don't have that. They have our money with them. They better not be buying those GPUs. Luckily, they're not. But so that's the first question. Apart from probably the top 4 or 5 banks in the world, most of the others are trying to think about rent versus buy there. But right on top of it comes the LLM, right? So the large language models, etc. For a time, maybe even now, there's still some chatter around it. There's the notion of small language model, saying that we will create a better fit-for-purpose small language model that's easier to train and based on proprietary data. Somewhere the value of proprietary data, that if you trained it on proprietary data, it's going to function better than if you train it on the internet, is a notion that was true, but increasingly that difference is going down. So the cost of training an LLM aside, the cost of running an LLM versus an SLM, again, the cost is going down. So at least our position today is that LLMs are going to supersede because bulk of the work is happening there. SLM, not enough work is happening. So again, there, unless you are JP Morgans of the world, you're not going to make your own LLM. And by the way, even those banks, they're not better served by making their LLM. Rather, rent it with a proprietary contract. So LLM again, by and large, it's a rent contract. Right on top of that is the application layer that starts. In the application layer, you can think about a governance layer first that comes, because this whole hallucination business, that word gets movies out of the bankers, right? By chance, if you ask the agent for my balance and gets you his balance, that's it. Bank is shut down. The Fed will come down, whichever. The central bank is going to come very hard. So they're very scared of that. And today, if you think about it, the entire information architecture of the world, including the banks, is a traditional SQL table. There's a table called user and balance. I'm simplifying it, but roughly it's that. So when you're telling the agent to go fetch your balance, you are giving the agent access to that entire table. There's no other way to get that balance. And because of that, it can possibly, if your name, my name are simple, or me and my wife, legitimately the agent can get confused and show me my wife's balance. Legally, it's not allowed. So you can get into there. Now that's an area which the banks or large enterprises tend to build, to say that this application layer we want to own. Now, build does not mean they need to employ in-house people, but they need to have complete control over it. By the way, the American Fed, our RBI, everybody insists that accountability and auditability belongs to the bank. Doesn't matter if you decided to partner with someone. You have to be able to demonstrate to the RBI without mentioning the name of your vendor that this is exactly what's happening. If not, heavy penalties. So the governance layer basically is something that the banks would like to own, and for right reason. Then there is the user interface. User interface, traditionally banks have been very bad at it. None of us love our banking app. But with this, I see that split. The primary channel they would still like to own, because bank doesn't believe they're giving up on user interface. Especially, I think even the payments revolution has shown that if you give up on the user interface, you lose access to the customer. The UPI apps end up owning the customer rather than the bank. They become a ledger. So there's a lot of intent to own the interface, ability not so much. So they're doing a mix of, they're doing their own, they're also partnering, but they need the numbers. They will get more numbers from there. At the same time, they're also investing their own user interface. Sometimes they would like to ideally switch.
Very useful. Raja, do you want to add anything?
I think Shiva spoke very eloquently about it. Just taking a slight segue on this, most enterprises, and I'm not talking about Visa, large organizations, right? Like right now, the effort, mostly they have categorized it, and as Sachin said, like core and non-core, right? Like the endeavor is to have the core business processes done by ourselves versus non-core, because there is still so much we don't know about how what the risks are. So before you outsource this to someone, it's better to kind of go on the journey yourself, core versus non-core. Second is AI literacy, even within the organizations, is quite nascent right now. So most large enterprises at least are taking significant effort to increase AI literacy amongst their employees. And Sachin and I were just chatting offline. It's about, so AI is like the new API, right? Like 10 years back, most of us spent a lot of time tearing down our old stacks and making it API first. Now, probably we're going to spend the next 5 years tearing down our API stack to make it AI native, right? So that the earliest thing he spoke about inter-organizational, if the 3 entities sitting in the payment chain tomorrow have to collaborate seamlessly on AI, all our stacks have to be AI native, right? So yeah, I think it's an interesting next couple of years.
Got it. I think that brings us to the end. Unfortunately, the monitor says that time is up, but I think we'll take one question. So we'll slightly cheat on our time limit. So any question from the audience? Okay. We have one person here. Can somebody give the mic to her?
Kindly keep your hand raised, ma'am. One of my associates will join you, requesting you to kindly introduce yourself and then proceed with your question.
Good evening. Deepthi here from Synergia Consulting. Thank you very much for a great session. The next chapter of, the fintech revolution may not be complete without a comment at least on, CBDCs, wholesale central bank digital currencies. As you gentlemen may already be aware, The pilot has been ongoing for more than 2 years with about 19 banks. Do you see it being extended beyond banks to financial institutions? That's one part of the question. And second, specifically for Visa, since it's integrated with CBDCs in other countries, are you also in a pilot for CBDC if you're in a position to comment on it?
Okay, I didn't get your question. Please, sir.
Her question is what's happening on CBDC and do we see it becoming dominant in the next few years? And also specifically what's Visa doing and is it participating in the CBDC pilot? Is that the question?
That's right. Like
Sorry.
beyond banks, like right now, the pilot's been for 19 banks, but do we see other financial institutions other than banks using it? Yeah, thanks.
I wouldn't like to comment on CBDC. Not authorized to comment on CBDC. Sorry.
I can share a perspective then. First, the question, can CBDC be extended to non-banking entities? The answer is no, simply because CBDC is money. Who can hold money? A regulated entity can hold money. That regulated entity is called a bank. So by definition, just as an NBFC cannot hold money, a payment bank cannot hold money. So an entity that holds money for good reason has to be regulated a certain way because cannot be allowed to misuse money, etc. By the way, if you follow all that regulation, then you're called a bank. CBDC is just another form of it. Second, why is India trying to push CBDC? Why are these 29 countries trying to push CBDC? It's ultimately to get around the current dollar-centric, SWIFT-centric system, right? So I can do direct settlement, etc. In order for it to work, you need to have enough liquidity in it. That use case, because of how UPI exists, UPI is effectively and very well digitized the rupee already. So CBDC looks like an overhead to most consumers, most entities participating in the payment network because, it doesn't do anything extra for me. In some other country where a UPI-like system is not there, CBDC adds a lot of value because you get instant settlement for real, etc. But UPI is already a real-time system. But somehow RBI and all the other actors, including banks, etc., have to push because it is in national interest, get the required liquidity. To get liquidity, you need volume. So frankly, they are pushing people to use it. They're trying to find ways, etc. And I think they will succeed because there are 2-3 use cases which seem to be working, especially those settlements and the bank settlements, etc. Once you get liquidity, it can become a very strong tool for you to bypass, and fundamentally, you will become far more competitive in your export business and similarly in import business. So the goal, I believe, is strongly nationalistic. It is a workaround against the SWIFT system, and it is acknowledged, which is why the moment the BRICS say there's even a rumor, obviously there's another lobby which comes and tries to scuttle that move, and so those are the geopolitics we're seeing it every moment. So that will continue. But India seems committed, and I'm commenting based on the public actions that I'm observing, that we seem highly committed to making this work. And whatever till now RBI has wanted to be done has usually happened. And I sincerely believe this will happen.
I agree with you, Siva. I think maybe I'll add a brief perspective of my own. I think there is also a strong dependency on how quickly a global consensus can form around one particular way of doing things, one particular framework, and so on. And there are multiple frameworks that are floating around right now. A few years back, we saw cryptocurrency. Now there is CBDC that a few countries are trying to prioritize versus stablecoin that a few other countries are trying to prioritize. Stablecoin is generally privately issued, and India has an adverse view on it. I think if you've not read, you can read the speech that the Deputy Governor of the Reserve Bank has written on the RBI website about why stablecoin is not something that they would prefer as currency in India. So I think given all of this and given the geopolitical angles, consensus formation might take some time, but I still agree with Siva that I think India is pushing hard to make CBDC happen. So let's hope for the best.
Thank you.
I think, can we take one more question or that? Okay, we're out of time. Thank you so much. And we can, of course, all of us will be available offline for a few minutes in case anybody has any questions. But thank you so much. This was a pleasure, and I learned a lot. I hope that some of you did as well and found this interesting. Thank you for bearing with us towards the evening, and hope you all have a good evening. Bye.
What an absolute brilliant discussion to have conclude our day one of India Digital Summit 2026. Thank you so much, gentlemen, for taking the time off joining us out here and for that brilliant discussion. If I could request you all to kindly step to the forefront of the stage for a quick photo opportunity. Once again, do put your hands together and let's give a loud round of applause to our eminent speakers joining us out here and sharing with us their thoughts, their ideas, talking about the next chapter for India's fintech revolution and AI's role in it as well. Thank you once again, dignitaries, for joining us and being a part of India Digital Summit 2026. It's been a pleasure and an honor to hear from you this evening. Ladies and gentlemen, with that, we wrap up day one of India Digital Summit 2026. We extend our sincerest of gratitude to our speakers, moderators, partners, exhibitors, and to each and every one of you, all of our audience members, for being a part of today's success. Special thanks going out to our presenting partner, Jio Hotstar, our co-presenting partners, National Payment Corporation of India and Get ePay in association with Meta. Thank you going out to our associates, our cloud communications partner, Proximus Global, banking partner, IDS’ First Bank, gold partner, PhonePe, PayPal, IDA Ireland, Bybit, PaySprint, First Hive, and Jagran News Media, silver partner, Times Internet, InSolutions Global, Spectrum Digital, Flip Carbon, bronze partner, Halo AI, TripGain, Sai Krishna and Associates, QRaptor, smart parking partner, Valet Easy, and our AI storytelling partner, Pocket FM. We will see you back again tomorrow for yet another day of how you and I can learn from our policymakers and industry leads on how to widen our horizon, grow our knowledge on India's digital way forward. And of course, in the evening tomorrow, our 16th edition of India Digital Awards commences. We will see you then. Until then, have a lovely evening and take care and be well. Just a quick reminder that at 6 p.m. this evening, we are going to go ahead with our hackathon right here at our grand ballroom build at IDS. We're going to have a lot of them putting forth their thoughts. And if you would like to be a part of it, do remain over here at our grand ballroom at 6 p.m. sharp this evening. We go live with build at IDS.